In this video, we will look at an example of the right of use of a motor vehicle as a fringe benefit. If we look at our example, X received the right to use a company four-seater car from his employer from the 1st of May 2021. The employer acquired the four-seater on the 1st of May 2019 at a cost of $350,000 excluding VAT. So the cost that you're given there is exclusive of VAT. The cost did not include a maintenance plan, and X pays $300 per month for the right of use and is responsible for all petrol and maintenance costs. Petrol cost him $4,000 and maintenance costs were $25,000 for the 2022 year of assessment. X kept an accurate logbook. He traveled a total of 30,000 kilometers, of which 10,000 was private. What you're required to do is to calculate the amount that will be included in X's gross income. The amount that will be included in the taxpayer's gross income is what we refer to as the taxable fringe benefit or the cash equivalent. Now, how do we determine what the taxable fringe benefit is or the cash equivalent? That is your value of private use, less reductions in terms of paragraph 7.7 as well as 7.8, less any amount that is paid by the employee to the employer for that right of use of the car. The value of private use, how do we determine that? The value of private use, remember if we go back to our previous slide, we determine the taxable fringe benefit by looking at the value of private use as our first variable. Now, if we look at how do we determine that value of private use, we need to look at the determined value, multiply that determined value by either 3.25% or 3.5% depending on whether the vehicle is on a maintenance plan or not, right? If the vehicle is not on a maintenance plan, then what will happen is that you will multiply the determined value by 3.5%. The 3.5% applies if there is no maintenance plan, and then the 3.25% will be applied if the vehicle is subject to a maintenance plan. Right, you need to look at the information that has been provided to you, and it must specifically state that the vehicle is part or is subject to a maintenance plan for you to multiply by 3.25%. If the question is silent in that regard, you will assume that the vehicle is not part of a maintenance plan, and therefore you will work with the 3.5%. And please take note that these two amounts, the 3.25% as well as the 3.5%, is a monthly amount. So you need to multiply that again by the number of months that the vehicle was used by the employee. Right, and that is how you get to your determined value. So what is not your determined value, but your value of private use? Now, what is the determined value? The determined value is the retail market value. In simple terms, that is the cash cost of the vehicle, and that cost will be inclusive of VAT if the employer could not claim the VAT. So if the employer, when they purchase the vehicle that they are giving to this employee, when they purchase that vehicle, if they could not claim the VAT, then the determined value will be inclusive of the VAT that could not be claimed because it will form part of the cost. However, if the employer could claim the VAT, then obviously the cost will be exclusive of VAT because the employer could claim that input VAT. Right. But the determined value is excluding any finance charges as well as any interest. Please take a note of that as well. So the determined value, just as a quick recap, the determined value is the retail market value or the cash cost, inclusive of VAT in most cases, and that would be if the employer could not claim the VAT, but excluding any finance charges as well as any interest. Right. What is also important to take note of is that the determined value, once you have determined it, meaning the cost including VAT but excluding finance charges and interest, must be reduced by 15% for each completed period of 12 months that passed after the employer acquired the vehicle before giving it to the employee. Right, so let's put this into practice. If we look at the example that was given to us, if we now need to determine what the determined value is, we will look then at the cash cost. If we look at our example, if we need to determine what the cash cost is, it would be this amount of 350,000 over here. Now, remember what they say is this amount is excluding VAT. So for you to get it to an amount which is inclusive of VAT, remember, that is what the determined value is. It's the retail market value including the VAT. So what we were given is an amount that is exclusive of VAT. So we need to take this amount to an amount that is inclusive of VAT. We will take that 350 multiplied by 1.15. We will get to an amount of 402,500. So remember, because the employer bought this vehicle or acquired it on the 1st of May 2019. If we count from the 1st of May 2019 until the 1st of May 2021, which is the date on which this vehicle was provided to the employer, we see that completed periods of 12 months would be 2. So it would be from the 1st of May 2019 until the 1st of May 2020, that would be 1 year. So that would be year 1, plus from the 1st of May 2020 to the 1st of May 2022 would be another year. So there's 2 completed periods of 12 months, right? So if we take that, and then it will be that 85%, remember that 15% is on a diminishing balance. So the 100 less the 15 will give you this 85% over here. So that's how we get it. So this would be for the first completed 12 months period, and this would be for the second completed 12 months period, for you to get you an amount of 290,000. Okay, and that would be your determined value. Now, if we look at then the value of private use, since we have determined the determined value, so it will be this amount of 290, which we determined over here, right, times 3.5. Why 3.5? Remember, we said that the vehicle does not include a maintenance plan, right? That is why we do not multiply by the 3.25, but rather the 3.5. And if we look at how many months did the employee have access to this vehicle, that would be a period from 1 May 2021 until the end of the year of assessment, which is 28 February 2022. So it will be May, June, July, August, September, October, November, December, January, February. Hence, we get to this amount of 10 months over here. And then lastly, we get to a value of private use of 101,782 for the year of assessment. Right. And then the next step would be to calculate or to determine what our reductions are, since we have been able to determine the value of private use. So that 101,782 is what we got on the previous slide over there, right? So now we need to look at the reductions and how do we apply that to the scenario that is given to us. In terms of the reductions, we have 2 reductions relating to the right of use of a motor car, right? These reductions are in terms of paragraph 7.7 as well as paragraph 7.8. Paragraph 7.7 deals with the reduction of the value of private use with the business kilometers traveled, right? And then paragraph 7.8, this is in terms of the 7th schedule, right? So paragraph 7.8 refers to or deals with reductions relating to costs incurred by the employee. So if we then apply that to our example, I've just split the possible reductions under paragraph 7.8 into 2, so we have about 3 reductions that relate to the example that we have before us. Right, this would be our example. If we look at how many business kilometers were traveled, then we will have to look at the information provided, and we say the taxpayer traveled 30,000 kilometers in total. So this is the total, of which 10,000 was private. So if we have private kilometers of 10,000 and we have a total kilometers of 30,000 kilometers, then it means the difference between those two would be your business mileage or your business kilometers, and therefore it means that the taxpayer traveled 20,000 kilometers. The taxpayer traveled 20,000 kilometers for business use, and as a result, we will take our value of private use, which we determined in the previous slide, multiply that by 20,000 kilometers over the total kilometers, which is 30,000, and we would get to an amount of 33,927. In terms of the second reduction, remember this reduction, it can be either fuel, licensing, maintenance, and insurance. Okay, so in terms of the second reduction, it is the maintenance costs that the employee incurred times the private mileage that has been given to us as that 10,000 kilometers. So if we look at the information, then to determine how much is our maintenance costs, where do we get that information? Petrol cost is 4,000, maintenance cost is this 25,000 over here. So this would be our maintenance cost. We will just take that amount and then multiply it by 10,000 over 30,000, and we will get to an amount of 8,333. The last deduction then would be reduction 3, and that reduction would be the fuel deduction, right? Why is that fuel deduction different from the maintenance cost deduction? The fuel deduction is based on the cost scale as opposed to the maintenance deduction, which is based on the actual cost that is incurred or paid by the employee. Right, so the actual cost in this case, that 4,000 over here, plays no role in the reductions that are available for purposes of determining the cash equivalent. So you don't look at the actual cost that is incurred by the employee, but you look at the deemed fuel rate according to the cost scale. Right, so if we look at our information, the cost of the vehicle is 350 excluding VAT. So it's that 350. For us to get to the total cost including VAT, we will multiply that by 1.15, and then we will get to an amount of 402,500 as our cost. So let's see, where does that 402,500 fit in terms of our cost scale. So it would fit in over here because it's between the 380 and the 475, so that's that 402,500. And therefore, for purposes of the fuel, we will look at then under the fuel column, which is this part, we will look at a fuel cost per kilometer in cents of 145.3. So now, if we apply that information to our scenario, then it would be that 145.3 cents times 10,000 being our private mileage. Now, if we take that theory that we've just learned in terms of the deemed cost scale, remember, if we go back, we'll use that 145.3 cents and we apply it to our information. It will therefore be as follows. It will be that 145.3 cents times 10,000 kilometers. And what is different from, or the reason why we split the different deductions, is to show you the differences. Now, with the maintenance cost, remember we look at the actual cost incurred or paid. But with the fuel cost, we refer to the cost scale. What is also different is that we don't divide by the total mileage as we did with the maintenance cost. So you just multiply the cost per kilometer with the private mileage, and you will get to your fuel reduction cost there of 14,513. Right. Now we have determined the value of private use. That is that 101,782, which is the first step that we did. And then we have also determined what our reductions are. Right. The 33,927 would be the business kilometers traveled. The 833 would be the maintenance costs. And then the 14,530 is the fuel costs. Right now, we need to have a look at the last deduction for us to get to a taxable fringe benefit or reduction, which is the amount that is paid by the employee. And if we look at our example, then that amount is that 300 over here, and it was paid per month. So you will just need to multiply it by 10 to get to an amount of 3,000, right? And then the net of that will give you a taxable fringe benefit amount of 44,992 as the amount that should be included in the gross income of the taxpayer. That brings me to the end of this example. Thank you.